Marfala, the most merciful, gracious and compassionate, most welcome. This is Samuel Naimi, Assistant Professor at Kabul University. And today's lecture generally we are talking about accounting, especially the principles of accounting and as well as the financial accounting. Before explanation of the accounting and the whole process in accounting, I briefly recurse to the definition of accounting. Actually, accounting is the language of a business. The first and the most significant definition for accounting is that accounting is the language of the business. Second, you can say accounting is the process of recording, classifying, summarizing, and interpreting the result. Or we can say interpreting the financial information. When we look at the definition, we have the process of recording. Recording means we are recording all the transactions in journal. Journal is the first book of accounting, where all the transactions should be recorded in chronological way. The second one is classifying. When the transactions are recorded to the journal, after that we have to post them into the ledger. The second and the most significant book of accounting is ledger. Firstly, we are recording all transactions in journal. After that, we are transferring them into the ledger. Recording transactions in journal is called by the name of journalizing. And when we transfer the transactions from journal into ledger is called by the name of posting. So firstly we are recording in journal, after that we are posting them into ledger. After the ledger we have trial balance, we have summarizing. The third step is called by the name of summarizing. Recording, classifying and summarizing. We have to summarize all the transactions in trial balance. The third step or the third book is called by the name of trial balance. We have to record all the transactions in trial balance. Firstly, we are recording a journal. After that, we are posting them into ledger, and after that, we are preparing the balance, or there should be the balance of all the transactions, and there should be the balance between the debit and the credit. After that, we have the financial informations, or we can say we are interpreting the result. There should be the profit and loss account, or we can say there should be income statement account. The second one is there should be balance sheet. Pay attention, we have 5 types of accounts, or in some cases we can say we have 2 types of accounts, the real account and the nominal account. In the real account we have assets, we have liabilities, we have capital, or you can say honest equity. In nominal account we have expenses and revenues. When we compare the revenues with the expenses, that should be done in income statement. There should be profit and the loss for the business. If you want to compare the loss and profit, if you want to compare the revenue and the expenses of the organization, you have to prepare the income statement account. After that we have the balance sheet. We have to prepare the assets, we have to calculate the liabilities and also the capital of the organization, which is brought by the owner. So these 3 accounts should be recorded in balance sheet. As well as we have cash flow, cash in and cash out of the flow, cash in into the organization and cash out from the organization. So that is called by the name of accounting. That is the definition of accounting. I have recorded there that we have transaction. What does transaction mean? Any dealing, or it means give and take, buying and selling of goods and services between 2 or more than 2% in term of money is called transaction. For example, purchased computer for cash, 15,000 Afghanis. We have bought the computer and we have paid 15,000 Afghanis against the computer. So that is called by name of a transaction. We can record these kinds of transactions in journal daily. So that is called accounting. So parties interested in accounting information, or the users of accounting information. The following people are the users of accounting information. We have the owners, we have the prospective investors, we have creditors, we have employees, we have management, and also we have government agencies. Those people, they are using the accounting, or they are interested in accounting information. So we have bookkeeping. Book means books of accounts, and keeping means maintaining or recording. So recording the transactions and keeping them, or you can say maintaining books of accounts in a proper or in a systematic way in terms of money. Every day we have the transactions. Every day we are purchasing something, or we will be selling something, or some cases we have the expenses, but we have to record these transactions, but we are recording them in proper way or in a systematic way. Is called by name of bookkeeping, or recording transactions in books of accounts is called bookkeeping. There is two types of bookkeeping system. One is single entry system, the second one is double entry system. Single means we are recording single effect of a transaction, or single effect of the transaction is recorded. That is the oldest system, that is the incomplete system, and that is not acceptable to people, because when you are recording transactions in journal, at the end of the period you cannot make the best or the real decision what is done in the past. For example, we cannot calculate that how much of the capital was brought by the owner, and right now how much of the capital or fund we have in organization, and that is recorded in a proper way by the owner, and we cannot take the decision. We cannot receive the complete information regarding the transactions that are recorded by the owner, and that is not acceptable to all. But when we are talking about the double entry system, it means double effect of every transaction is recorded. It means we are recording the transactions in both aspects. We have the debit and credit sides. We have to record them, because in the definition of the accounting we have talked about the process of recording, classifying, and summarizing. We are recording the transactions in double side. We are recording them in debit as well as in credit. This system is the new system. That one is the complete system and is acceptable to all. If you are recording transactions, it should be in chronological way, and the top level management can make decision easily, because they know what has been written by the owner in this book. At the end of the period we can prepare the trial balance, we can prepare the income statement with profit and loss account, we can prepare the balance sheet. In income statement there should be the comparison of the revenue and expenses of the organization, and in balance sheet we are recording the assets, we are recording the capital, and also we are recording the liabilities. So at the end we can make the decision easily. So that is the accounting. So it's enough for today. In next class inshallah we'll talk about difference between accounting and bookkeeping. If you have the questions, you can ask the questions. Thank you so much.